What's going on, guys? How are you? Welcome back to my channel. This is Shocks, and this is Shocks Capital FX YouTube channel. I welcome you all, and today we are going to talk about why your sniper entries are failing and what you can do to make better entries in the forex market. So today I'm going to look at this chart, this particular chart, and as you can see from the chart, you can see that I have marked like 4 setups which failed to produce a sniper entry in quotes, right? So you remember those trades which you have taken you remember those trades which you have taken before, and you thought you have caught a wrong setup, or your setup has failed or something like that, only to check later and see that price has moved in your intended direction. So today I'm going to show you how to trade these things, why your sniper entries are fading. So number one, I know a lot of forex traders out there, we are obsessed with getting super sniper entries, those the kind which we can take screenshots and post on Instagram, right? So I'm going to show you something which is less fashionable but can make you a lot of money. So we want to start here. So we're starting from here, right? This is an order block, right? So if you don't know about order blocks, check out our channel. It has a lot of content pertaining what these order block things, smart money concepts, institutional order flow. If you are new here, scroll down the channel. There is a lot of content you will like. So this is an order block, as you can see, right? So this line, this horizontal line, black line, marks the point of failure of the setup, where we will know that the setup has failed. But as you can see, it just prints one candle, then turns and goes all the way to all our targets, right? And this is what we are seeing. Right? So how do you trade these kind of scenarios? You see, all of them, there is that spike. So for the purposes of this video, let's just call this a stop hand above the order block, right? So the reason why you were stopped out here is not because the setup was bad or you didn't analyze well or anything. I'm just going to show you why on the lower time frame. So let's start with the first one, to M15. Let's start with M15. It looks like this. This was your area, right? This was your area, and this was the decision point, the order block which you would have used or not on this entry, and the stop loss was probably going to go here. But I want you to look at this. I want you to look at this move right here. At this move, if you look at this move, what do you see? You see aggressive momentum to your base. Let's just call this base rally. So drop, base, drop, right? Let's just call this base, right? You see price moving up aggressively to your base, and your base is here. So you see what happens, it just goes above your point of invalidation, right? Above the point of invalidation, throws a pin and goes into your direction. So how do you trade this? This is M15. I just wanted to show you the bigger picture of this thing. So this was having, let's go to M5 and try to see how we could have taken advantage of this trade. First of all, let me just point something to you. You see there's a lot of liquidity here, equal highs and everything. So we have a double top here, and this is a resistance area to most of the traders, right? They would draw a point here and say this is a resistance, and they were expecting to sell at this point. But you see what price did? It took all the liquidity that was resting above this yellow zone by this move aggressively, and went above your point of invalidation, your order block, right, at this point. So I want to introduce 2 things which you can use. Number one, you can use what we call a liquidity grab plus change of character. Then number 3, you can use a candlestick pattern that is called a morning star. So it can be a morning star or an evening star, depending on the direction which you want to go. So for starters, let me just explain what a morning star looks like. A morning star looks like this. Let's say we have an up candle here, then we kind of has a zero move. So if I say a zero move, I think you know what I'm talking about in terms of forex. So for those who play chess, you know what a zero move is. That's what we are referring to. referring to a candlestick that is called a doji, or we were just saying no, there's no movement, there's indecision, you know, all those terms that we use, all those big terms that we use when we try to explain these things to our friends, right? So that's what we are trying to use here. So you have this indecision candle, the big candle, the red candle. So as you can see, this is a zero move in a sense that we've started here, right? And we come back here. So all this is a zero move. So for you to enter this type of a trade when price has gone above your above your order block, what you have to do is to make sure that this formation is above your that this formation is above your line of invalidation. By that I mean the intended stop loss in the first place. So let's say this purple line, right? This is our point of invalidation. If you see 3/4 of this pattern above the line, you can then sell, right? Do you understand? So we have this candle. So let's start from here. If you look at it from M15, would consider this, and big blue candle, another candle, then this is what is an indecision. This is an indecision, and what are you going to do? You are going to sell here. Why? Because this is a star formation pattern, right? That's a star formation pattern, and that's how you are going to enter this. That's example number 1. Let's go back to let's go back to the H4. Oh no, we were in H1. Was it H1? Yes, we were in H1. So let's consider this one second. So this is our second setup which we want to consider and see how we go to M15 first, try to see what was happening there. So you see, this was the point of invalidation, the black line. You see, price just spiked up below the line, and and goes to your into your direction. But we want to get our entry from the M5. So this is it. So number 1, remember I said you can use what we call change of character, or we call it choke, like CH. Okay, let's just write it down. Call it choke, change of character, right? We can use this thing. What is this? This is a scenario where we are having a liquidity grab before going into a point of interest, then move up and break and break structure. Do you understand? That's what we are saying when you say choke, right? So what do we have here? Here we have, before we take this low by this move into the point of interest. That is what this is, liquidity grab. Then when we break a high in the other direction like this, this is then what we call choke or change of character. Here, this is what we are calling change of character. Then after that, we are looking at this as our order block, and we are executing here with the stop loss of that size, and we are going up like that. This is how you can enter your trades if you don't want to get stopped out. You remember, you are chasing sniper entries, and you can get them here. Remember, if you enter here, this is a very nice entry for your Instagram, and you can behave the same way you would if you had gotten it in your first intended area. So let's look at this setup and see how we could have utilized that, and how could you have taken advantage of that entry. Go to M5. So now I'm not going to M15, because now you know what we go there for. All right, number 1, what do you see? You see what do you see here? We have all the conditions. We have liquidity grab into the point of interest. This is what we have, liquidity grab in the point of interest, and we have a pin. And okay, I want you to see something. You have this candle, right? This blue candle. Then we have this pin, a doji. Those are indecision candles. Those are what we are calling zero moves, and you are waiting for price to move back here where this candle started. So you see the pin grab above your point of invalidation. You see candles dropping like that, and this looks like a star pattern to me. Why do I call star pattern? Because I am saying we don't have a retest of an order block here. Remember, you have to have liquidity grab, change of character, and a retest of an order block. But here, if you don't have that fractal of price, you are going to use what? You're going to use this star formation pattern as your entry pattern. If you go and look at our video where we were talking about entries, remember we did explain what a star pattern is and how you can take advantage of that as an entry pattern. So let's go to H1 and try to see this. Okay, let's just delete everything and see things clearly. I like to my charts clean. So right, this is the last example. What do we see here? We have, if we go to M5, remember we have the star pattern. You see this is the star pattern we're talking about. Candle up, indecision, came down to the area where it started. So you sell here hard, then go for the what, for the lows here. This is your what, this is going to be your take profit, and this is how you can avoid being stopped out by chasing sniper entries. So this is how you can trade without what a lot of people teach as sniper entries. Guys, I will see you in the next video. It's been a wonderful experience with you. I hope to see you in the next one. Trade what you see.